Hello, guys. Welcome back to Stacking Stocks, and thank you for tuning in today. So, we're back at it again with more news on NEO stock. What have we got on the pipeline this time? Nothing but relevant content for investors. In today's video, we'll discuss some key numbers for NEO and the stock's fundamentals and give you a clear picture of NEO's future. Now, let's get into it. NEO is one of China's leading new electric vehicle players. Despite almost going bankrupt a few years ago, the pure play NEV player has made a tremendous comeback. NEO posted weak October deliveries. Nonetheless, the company is still leading in total deliveries year to date among its leading pure play peers. The competition is very close, but NEO continues to grow rapidly. The scale and immense opportunities of the Chinese market made Elon Musk famously proclaim that China will be Tesla's largest factory and market. Amid NEO stock's relatively weak performance in 2021 so far, we'll discuss whether it's time for investors to add the stock to their portfolio and what people should anticipate ahead of 2022. NEO stock has had a subpar year in 2021. While it had started the year strongly, its upward momentum collapsed following the rotation from growth to value stock in February 2021. Despite making a remarkable recovery in May, it has remained in a consolidation phase. In contrast, its Chinese NEV peers have managed better performances so far. NEO stock is currently underperforming its leading Chinese NEV peers and Tesla stock with a year-to-date return of negative 16.8%. Well, that sounds quite a bit disappointing. Despite NEO's surprising struggles, the company can count on its home market, China, to support its growth. China is the number one EV market globally, retaking the lead it briefly lost to Europe in 2020. Bloomberg NEF estimated that the EV share of total China car sales will reach 25% in 2025, which is up from just 6% in 2020. China's government projections are slightly more conservative, putting it at 20% by 2025. However, China's EV sales outperformed these estimates as the EV share of total sales reached 17.5% in September and averaged 13% year-to-date through September. Hence, we believe the massive secular tailwinds underpinned by China's national agenda in EV adoption will continue driving growth for NEO. Notably, the company expects China to be its most important market even as it charts its European expansion. NEO CEO William Li emphasized that China is still the biggest auto market and the biggest premium market as far as the global market is concerned. And seemingly that's quite true. So it means that China will still be the most important market for NEO, but the CEO also stressed that for the markets outside of China in the long term, they should account for around 50% of all sales of NEO's products. Therefore, we expect China to continue driving the growth of the company moving forward as it scales. NEO highlighted that it currently has a maximum annual production capacity of 600,000. Therefore, the company has positioned itself very well to scale its production moving forward. Considering its current year-to-date deliveries, we believe NEO's market opportunity is still in the early innings. Currently, BYD Company Limited is China's leading NEV maker. Its year-to-date deliveries through October 21st highlight the company's undisputed leadership. Notwithstanding, though, NEO continues to lead its pure-play peers on year-to-date deliveries. However, the competition is very close. Nonetheless, we believe that China's massive tailwinds driving EV adoptions would continue to benefit NEO and its peers. In addition, even though NEO reported underwhelming October delivery numbers, we really don't believe it's a cause of concern. We believe that you've all come across NEO's weak October delivery numbers of approximately 3,670. However, we're not unduly concerned about October's numbers. The company reported that it needed some downtime to adjust its manufacturing process to scale the ET7, which is NEO's upcoming flagship sedan. To prepare for further capacity expansion and new product introductions, including ET7, NEO implemented upgrades and the restructuring of the manufacturing lines at the Hefei JAC NEO Advanced Manufacturing Center. Affected by the upgrades and the restructuring, the company delivered 3,667 vehicles in October. The plant now has resumed normal production since late October. Well, do you now understand NEO's predicament that led to weak deliveries in October? That's why we're not too concerned with NEO's October problems. The company guided fourth quarter deliveries to be between 23,500 to 25,500. So the fourth quarter deliveries are estimated to be about 24,500 at the midpoint of NIO's guidance. Therefore, quarter-on-quarter growth is estimated to be flat. Notwithstanding, if we account for October's weak numbers, the company expects strong deliveries in November and December. On average, the company expects to deliver about 10,420 units each month for November and December, respectively. That would place it in line with September's record month of 10,630 deliveries. Therefore, the worries about October's weaknesses have been overblown. NIO's expected deliveries for financial year 2021 would amount to about 90,900 units. Compared to its annual production capacity of 600,000 units, it's clear that NIO expects to ramp production rapidly moving forward. While it might take some time to reach the 600,000 annualized run rate, NIO is preparing to launch 3 new products, including ET7 based on its NIO Technology Platform 2.0 in 2022. Therefore, the company is actively refreshing its slate and expects to continue its rapid delivery growth next year. Notably, the company also expects to navigate the chip supply crunch really well. It's also impacted NIO in the near term. However, NIO demonstrated its capabilities on its in-house technology, as Lee explained that they've managed to get around those problems. NIO has expanded its top line rapidly. Notably, it's also managed to improve its operating leverage tremendously as it scales. We believe that NIO is very early on in its profitability growth. Given that it has an annualized production capacity of 600,000, NIO is still expected to grow rapidly. The company is estimated to grow its top line by a phenomenal CAGR of 77.7% through financial year 2023. Its EBIT consensus estimates also point to a lower EBIT loss margin of 2.1% in the financial year 2022. NIO is estimated to turn EBIT profitable by financial year 2023 with an estimated EBIT margin of 3.2%. Therefore, NIO investors can continue to expect the company to gain traction in its European journey and in its home market. In addition, we encourage investors to pay close attention to its new product launches in 2022 as the company expects a strong delivery cadence moving forward. Notwithstanding, based on the fourth quarter's guidance, November and December delivery numbers should also be impressive. NIO beat estimates in the third quarter, but forward guidance was disappointing. NIO stock is just slightly over the 60-day moving average and has an RSI of 52. On November 9th, NIO reported its third quarter results, posting both an earnings and revenue beat. Non-GAAP EPS came in at -6 cents, beating estimates by 4 cents. Revenues increased by 128% year over year at a total of $1.52 billion and estimates by $50 million. All in all, the company is still in hyper-growth mode, but investors fear that this growth might slow down soon. We can't really blame them from one perspective because competition is really fierce right now, and that's why we keep making new videos and doing some more research on NIO stock. We believe the EV landscape is quickly evolving. The outlook for the fourth quarter underwhelmed investors. This is a fact that NIO did guide for lower than expected numbers, but this also presents an opportunity as some investors get frustrated and jump ship. But we understand their perspective because some people have a much higher cost basis. NIO stock is trading on an EV NTM revenue of 7.9 times. It has come a long way down from its January highs. Moreover, it's also just about 14% above its 3-year mean. Therefore, we believe that NIO stock valuation seems attractive now. It's a much stronger company than it was 3 years ago. In addition, it has also significantly improved its operating leverage. Coupled with strong secular drivers underpinning its rapid growth ahead, we believe long-term investors would do well to sit on it. If NIO can continue to build on its delivery cadence, we think the stock will be re-rated moving ahead in financial year 2022. Therefore, investors should capitalize on its weakness now to add NIO stock to their portfolios. NIO has a strong brand, very good technology, and an interesting play in the market with its battery-as-a-service solution, and it's also expanding its manufacturing capabilities. The stock is displaying so much potential. Let us know what you guys think in the comments section. Don't forget to like, share, and subscribe. Until next time, remember to always invest wisely.